Hello and welcome to this live from Paris non-Dubai Trading Academies and Paris Trading Academy. So today's live will be in English as every Thursday. I'm very pleased to be with you for this live training session on Nasdaq and S&P. So this is like we are now at the opening bell, as you can see on the market that are now moving erratically. So while it's settling a bit, we're gonna check and talk a bit about our fundamental analysis. The main point, the main topic today is the earnings season, because we have like a bunch of results coming in today. We had like some small the economic indicators that went out today, but mostly the big topic. If we look yesterday, we've got the result of Tesla, of Netflix, of IBM, Goldman Sachs. We had quite a few results yesterday. Today we had a few, but not that big ones. Before like the open, we had TSMC, which is like Taiwan semiconductors. We had some regional bank, US regional bank. And this afternoon we have like this tonight we will have some others, but not really big ones. The big ones that are missing are next week. Next week we have like Alphabet, Microsoft on Tuesday, and on Wednesday we have Meta, Coca-Cola. We've got quite important one next week, so we're gonna need to be we need to follow them. Amazon as well next Thursday, so we're gonna have quite a few earnings next week, so we're gonna need to be careful about that. If we look at the news for today, mostly like I said, it's mostly about earnings, because that's earnings season. So basically, we had like not very important earning that came out already, but they were important, but they didn't create big volatility on the market. If we look also at the market, we can see how the market behaves so far. We can see that the bonds, except Chinese one, the bond yields went up, same as just here. So that would be a bullish signals, for the stocks. Even though steers in France, for example, went up a bit. Germany, but Also in Japan as well, they've earned 10% today, but they're still highly negative. We've got the Euro USD with a correction today. If we look like this week actually, from the 18th, so the last 3 days. But if we look over a quite long time, since September 2022, we've been on an upward trend. When we reached 0.96 euros per dollar, now we are at 1.11, and we were at 1.1215 earlier this month. Here you can see. So basically next week, earlier, at the beginning of the week. So otherwise future were down before the opening. Either the Nasdaq was down 40%, 0.4%, 40 basis point. S&P 10 basis point. If we look, Asia and Europe were up. No, Asia was down, but Europe was up, was going up during the has been going up so far. So if you look at the DAX, the FTSE, the CAC 40, the Euro stock, you can see they've all been they all have seen a raise today. So this is giving us like some that's giving us actually more of a bullish signal. Like to be fair with you, we don't expect like a huge amount of volatility today, because next week we have like the Fed meeting, like exactly next week, where they normally should be 26, so like next Wednesday, where basically everybody accepted the fact that they were gonna hike the rate, but if you look, everybody then expect them to keep them at the same. Most of the people expect that at least until the end of year they're gonna keep them at the same price, and that seems some economists may seem that it's a bit optimistic, and we can see like this optimism in the pricing of the market, where we can see that the index have been like really high. We are getting closer to on the Nasdaq. We are getting close to the all-time high. So let me check quickly the S&P. It doesn't show it to me. Not on the S&P yet, but we're still getting closer. We're getting closer. To the all-time high. That is, I believe, on the future. It's let me check quickly. It's around 4,800. Yeah, something around 4,800. So also, I don't know if you remembered, but last week my trade plan was for my last live, I didn't enter any position because it was after the live, but I gave my trade plan and we spoke. It was I wanted to enter which day was it? Oh no, that's not this one. It was something 84. Oh yeah, it was here. I believe I wanted to enter le 13. It was here. I think, if I remember correctly, I wanted to enter here and exit somewhere there. So yeah, it's exactly at 560. I wanted to enter at 15,560 and exit around 80 at 34, and I would have probably taken it after it confirmed here on the support. So yeah, but I couldn't take them because I was taking care of one of our students that was having online training session. So this was a pretty good. That was pretty like once again it shows the importance of technical analysis in order to figure out which level are interesting and how the market might behave around those levels. Tac. So also I wanted to talk a bit about the Paris Training Academies, because we've been moving out. We moved, so I actually and we have a new website. So this is our new website, and so we have the dates of the next session. So 4th of September till 6th of October, 16th of October to 17th of November, 20th of November, 22nd of December, 8th January to 9th of February. So yeah, this is our new website, and we have a new address which is here. Let me show it to you on Google Map. so it's here, and our previous one was actually here in the Trinity Tower. Yeah, our previous one was here, and our new one is gonna be here. So as you can see, we're still quite close. Basically, we're on the other side of the mall of the Les Quatre Temps, but still in the heart of La Défense. So feel free to come anytime to visit us once the sessions are gonna start. Also, there's probably gonna be one last live this summer, like in English next week, and then during August there's probably won't be any, because I'm gonna be on holiday, Hassan will be on holiday as well, and we're basically gonna be on holiday during the month of August. So yeah, there shouldn't be a lot of there are not gonna be like I said, there's not gonna be live this summer after like next week. So yeah, also, while I was preparing for this live, I was listening to CNBC like as always, and I heard an economist from a big investing firm that was basically saying they expected a 10 to 50% pullback on the second semester of the year 2023, like from basically the end of the September until December, because of the optimism of the investors of the market that for them seems unjustified and irrational. And also even though I agree on the opportunity for a pullback, like on the fact there's gonna be a pullback, there should be a pullback, I also want to remind you of Keynes, one of sentence that says Keynes. So if you don't know who Keynes is a very, very famous and important economist of the beginning of the 20th century. And he says that he said the market can be irrational longer than you can stay solvent. And what that means is that sometimes the market will in the short and medium term very often have behavior that are not that are not necessarily rational, and wanting to time the market and be the first one to go against the tide is a very risky game, because like he said, market can stay irrational longer than you can stay solvent. So basically our trade plan for today is, so we've got one long, we've got two long and two short, because we don't really expect major moves today, because there's not really big economic news, and not really big economic news. So the short one, if we take short on the Nasdaq, it would be around 815, maybe now, since we have here this now, and I wasn't there, around 1500, 15800, and along, if we break and confirm above 16,000. So not 1500, 15,800, and here 16,000. If we reach 16,000 points and we break out, we might take a long on the other side, and otherwise we might take a short around this level here on the Nasdaq. On the S&P we have two other one. We have one short around this level here at 45.75, so if we break and confirm we will probably take it back, and otherwise we have another long if we manage to break out those levels, so if we go somewhere here. So basically if we break out from here, like if we break the top and come back on the pullback, we would take it here. Otherwise I will be glad to spend 1 hour talking with you about different topic. I've prepared a small speech. Yeah, that's okay, mic is working. So I prepared a small speech about risk management in trading, because that's what I think is for me the most important. And I'm not talking about like the psychological risk management, but basically the management of your the money management and the management of your account. So there's several tools for that, and that is position sizing, stop losses, and writing trade plans. Because if you write trade plans, you're not gonna take you may take the time to think about your trade, and you're not gonna make enlightened trade or trying to trade impulsions. So one of the key rule, the key rule, the most important one in when you're trading, is don't trade money you can't afford to lose. Because when you're trading, the risk of losing the totality or even above of your capital, of your gains, is very high, is very likely, and I would even say very highly probable. So if you're trading with money you need to use to eat, or to pay back loans, or to go to work, or to put gas in your car and everything, you can end up in very big financial trouble. And even though trading is very interesting, it's also important to be realistic and to understand our own limitation, and to know why you don't and to not trade money you can't afford to lose, because like I said, there's a very high risk that you might lose it. Also, your position sizing should be chosen according to your risk tolerances and also the size of your account. Basically, you should never, the risk of your position should always be between 1% and 10% of your below 10% of your trading capital, because otherwise, if you're wrong, it's very possible to be wrong several times in a row. And if you have a risk that is too high compared to the size of your trading capital, and you make a few bad trades in a row, you're gonna end up by blowing up your account, and therefore you're not gonna remain solvent for a long time, and your trading, your experience in trading, and your trading experience is gonna be is gonna last as long as you have money. And if on top of that you traded with money you couldn't afford to lose, you're gonna blow your account pretty fast, and on top of that end up losing way more than what you should have. And also it should at the very worst it should never be above 30% if you have very little capital. But really, in that case, you will need to be extremely careful when taking up your trade, choosing when choosing your trade, sizing, picking up your entry points, and I strongly recommend you not to do that. Basically, like I said, generally the rule of thumb is about between 1 and 10% of your total trading capital. Because if it's too small, then the benefit is not going to be sufficient to be sustainable, and you're going to need a very long time and to take a lot of trade in order to be able to generate a profit. And this is not and the more you take trade, the more you are at risk of losing. There's actually a study by the French IMF, so the French equivalent of the SECs, that shows that for retail investor, the more they take trade, the more they lose, but by a very strong margin. So basically, the key is to make the least amount of trade possible, but to take the best one each time. Like I can show you on my trading book. If you look here, it's basically my daily PNL according to the amount of position I take, and you can clearly see that it's on, well, not necessarily, there's not a lot of dots so far. The cloud of dots, I'm not sure of the name, is not sufficiently important now, but you can still see it's a pretty downward trend. The less I take a position, the more money I win. On a pretty, it's quite. It will depend on if it's a good or a bad day, but basically, more I take position, less money I win. So the goal is not to take like a lot of trade, but only to take good ones. So yeah. Also, one of the most, to me, one thing that is the most important is to put a stop loss. Stop loss are an amazing tool in order to limit the amount of money you're gonna lose. You should really never trade without a stop loss, because if you trade without a stop loss, it's it's guaranteed you're gonna blow out your account. It's always better to put like a stop order when you enter a position, and pick like a proper level to put a stop order, and then not change it depending on the way the market moves. But because that's also one thing we see a lot of students do. They tend to put their stop loss, but then when they see that the market is moving against them, they tend to move their stop loss in to move the stop loss either down or up, but further from the price, from their entry point, and then therefore their stop loss ended up being useless, because if the stop loss would have gotten hit in the first in the beginning, they would maybe have lost like $200, and or maybe 5 points, 4 points. And if they wait until like the end of the after they move it, in the end they will sometimes lose 1,000 on one trade, sometimes more, and therefore it's not they are not gonna be able to last a long time in trading. Your stop loss should always be placed where you have a confirmation, once your move is once you have the confirmation that your move is not happening. So basically, you can generally, as a rule of thumb, we would place it before the level of the previous correction. and if you can't put it there like because the or if the correction is too far, always try to pick like a sensible and sensitive level, some maybe with the like by looking knowing what it like which level by looking at the order book, but not like just put it at random, or not put it at okay, I put it there because if I put it there because the amount I'm gonna lose if I put it there is x like is x dollar x amount of x dollar, or it gives me like a risk reward of 2, for example. Like that's not how you calculate a risk reward. You don't put your stop loss according to your risk reward. You put your stop loss and then you calculate your risk reward. That's also something I see a lot of our students do when they arrive, is absolutely try to once we explain the concept of risk reward and how to calculate it and how to trade, like to calculate to enter trade according to their risk reward, they will tend to modify the trade in order to have a good risk reward. But that's not how you're supposed to do. You're supposed to have a risk reward that match like your risk reward should be calculated according to your analysis and not according to what would make a good trade or not. Okay. So yeah, as you can see, pretty strong bell on the Nasdaq. It's because we have a pretty balanced market so far with here, and also here, like where we have like you can see it here as well on the market profile. Basically, the market is pretty balanced up until like somewhere here, and upward, yeah, somewhere there. So this is not an area we want to trade. Basically, and like we said, if we enter long on the S&P, for example, we wait until we break this level, go upward, and then come back, and on the pullback and pull back, and on the pullback we would enter a trade around this level. That's also one thing I see a lot of beginners trader do, but mostly on the internet, is average down. It's average down. Basically, this might work in investing when you have like a very long time horizon. Like it's okay to buy when the market, like to buy to average on a losing position, to do like dollar cost averaging when you're doing it, when you're investing. Like if you invest money every month, it's better, by the way, to invest a small amount of money every month than a big lump sum once. Tac, yeah, to invest because if in trading, like we said, the market can move in the like to paraphrase Kane and change a bit, but keep the same ideas. The market can move in the wrong direction for you way longer than you can stay solvent, especially if you're like a small retail investor. If you're BlackRock, you might be able to hold it, but even like if you look at the history, if you look at Lehman Brothers, when the market was moving against them, there might have been a 200 years old financial institution that was there before the Federal Reserve, and that was like a pillar of Wall Street and investment banking. Once the market started moving against them, they did lose everything and ended up bankrupt. Therefore, you always really need to consider that the market can really move against you way longer than than your ability to stay solvent. So it's 4. We actually had some. Yes, that was yesterday. Some economic indicators that went out. So the home sales. So basically, we've got a decline in the home sales. Yeah, sorry, I'm a bit tired. It's not gonna be like a really long stream today. Top of that, I still have quite a bit of job of work to do, so I might end it like around like after like 40 in 15 minutes, half an hour. Also, I started to work on on the Discord server for the Paris Academy students, because that's one of the most frequently asked questions that we get from a student. Like, is there like some WhatsApp or Discord where we put all our students so they can exchange, ask for information, share their analysis, debate about the news, its interpretation and everything. So I started creating about it. Creating it. So far it's only in French because but I will probably create the English version once I'm done with the French one. So if you're there tomorrow in the in the Paris Academy in the French live, I will probably share the link at this moment. So if you really feel free to join, it would be our pleasure to welcome you on our server. So as we saw, still pretty erratic. Well, the Nasdaq a bit more than the S&P, even though we reached here we see there's quite some big buyers that are concentrated on those level, even though this one's going up, well now they're going back down and splitting actually. And that's probably a reaction to the existing home sales. Because it's quite a good indicator in the level of the economy, in the trend of the economy. Because if the economy is going well, people will buy houses. Meanwhile, if the economy is going poorly, if people don't have money, don't have job, if the prices are too high, people ain't gonna. Yeah, this one's gonna break. So yeah, we can see we have we have one buyer that's moving around here at 17. Got another big one here at 800 sharp. Yeah, see, there was one here, but it got eaten by the sellers. So yeah, we're getting to maybe enter on the pullback. So now waiting because we expect like normally a pretty strong pullback generated when we reach about this level. So once we go down, let's see if we go once we go down here, once we got the pullback on this level, we will enter. Actually, it's gonna be probably a bit higher. So yeah. Yeah, we still haven't had like a really good breakout, so I'm quite reluctant to enter, to be fair. I'm not necessarily overly confident right now with the way the market's behaving. Well, so we've been pushed back pretty strong. We came by once, we've been pushed back pretty strong, like for the second time. So we can see like there was like a seller, but he moved his order at the last moment because there was 40 order here, but there's only been 20 executed at this level. this is bad. So, yeah, okay. We don't like this guy at all. Yeah. Oh, this is bad. Goodbye me. Yeah. So, okay. We've been... Okay. So, as expected, I took it way too low. This is bad. So you see the importance of patience. Once again, here I entered too early because I expected it to drop way more, and then it came back. If you look, I would put my stop loss. I entered like too early. I could have had taken my entry like as I expected, and I wasn't. Probably not my exit, but I could have had a way better entry. And if my stop loss would have been at the level I've wanted to put it, like I wouldn't have been it. So it really showed the importance of the entry, picking your entry when trading, especially with scalping with such like high c'est clairement là un endroit qui pue, putain. And now it's going. Oh, it's a double bottom. At least I'm the only one watching it, so it's not that bad. Ah no! We're three. Hello Hassan et Brahim. Ça m'énerve. Ah non, maintenant c'est trop tard en plus. Putain, ouais, ça m'énerve. Ah. Well, what's important to do when it's a bad day like that is to know it's a bad day and manage to stop before you start being stupid. The minimum, take a break. Okay, so on this one, and if this one's bad, I will stop. I will end there. Mm. Yeah. Da, da, da. It's not gonna take me. So you know what? We're gonna stop here because otherwise I'm gonna get like tilted. So have a nice end of day and see you tomorrow.